So our first speaker is Wendy Waters. And what I think is fantastic about her, she's a historian, PhD in history, economic history. And she's with GWL Realty Advisors, Vice President of Research and Strategy. So you've got a company, this is a serious company, $15 billion in assets. And this is not just an observation that you make about her, because good chance that your pension or some of your benefits are dependent on her doing a good job. Wendy, please do a good job. We need our pensions and we need our RSPs to be looked after, etc. So she is sought after by the media, and her job is to understand and predict and get a real grasp of what is happening in the land market. So I think that we're very honored that she would come and be part of this. So Wendy, please.
Okay, thank you very much for inviting me to this and to have a chance to compare or to examine how what we're seeing in the commercial real estate market compares and actually very well reflects some of the ideas that Alain Bertaud has written in his book. I am going to share my screen, so just bear with me as I get technology set up here. And just one more thing. There we go. Okay, I think we're good to go. I'm assuming everyone can see my screen, or they will. Someone will yell at me. So thanks, Sam, for the good introduction. You did a good quick overview on what we do at GWL Realty Advisors. I thought because this audience, probably some of this audience is less familiar with what we do, I'll just spend a quick minute on that because it does help explain where our research comes from. So we manage the real estate assets of pension funds and institutional clients. We have open-ended funds that they can invest in, that pension funds invest in, and some of them do direct investment with us. So we actually manage buildings on their behalf, and then we have funds.
Wendy, sorry, Wendy.
Yep.
They can't see your screen. Can you try?
Oh, trying again. Okay, it only works in practice. Okay.
Wendy was early and got all this figured out, and
now it's not working. Okay, share screen. Screen 2. Share. There we go. How's that? Is that working?
Voila.
Yes. All right. And now I can see you guys. So something clearly went wrong in the first attempt there. Okay, so what does GWL Realty Advisors do? Pension fund, manage the real estate assets for pension funds, institutional clients. Most pension funds have about 10 to 15% of their assets in real estate. And why they do that is for the income stream that comes from them. So it's in assets like office buildings, rental apartments, industrial parks, shopping centers. That's what we manage. There's also a few other smaller types of real estate assets, and they generate an income return for the pension fund. So that's important. And what's important about what my team does is we need to make sure that we're aligning where they're investing in real estate with the long-term trends in the city, so that over 20 to 25 years, they still get that rental stream. So it's a long-term thinking process. And so that does actually dovetail well with what often a lot of planners hope to do, which is to be thinking long-term. What was really intriguing, so I had, I've been doing this for 15 years. We've been thinking about what drives real estate performance. And what was really intriguing about reading Alain Bertaud's book was that he came to a similar conclusion as we have, which is the labor market actually is a key driver. That when we've looked at what correlates to good performance in real estate, nothing does it better than the jobs, where the jobs are coming from, and employment levels in cities. And so we were thinking about what fills up office buildings, it's jobs. What fills up in demand for industrial space, it's jobs. Apartments, it's jobs. So I thought I'd start with maybe just sharing some of our research and how we look at this. I thought that might be of interest to the group. We use location quotients. Sometimes I think planners call this the Hochman Index, that looks at the concentration of jobs in certain sectors in a given city compared to the national average. Anything above about a 1.05, we consider it an economic driver, or a driver of the performance in that city. So Vancouver actually is the most diversified city in Canada that we invest in. And which is probably not what people may have thought, or at least certainly a couple of decades ago on Vancouver. The Information Culture Rec Center, I know this might be a little small, hopefully you can see it. Culture Rec, that is also includes computer software. So the likes of electronic arts, I believe those jobs end up getting, say, classified there. At a 1.5, really strong driver, business, professional, scientific services, technical, that's, you know, the architects that are here, engineers, consultants, accountants, lawyers, all in that category. Finance, insurance, real estate, transportation and warehousing, also really important for Vancouver, and accommodation and food as well, which I consider a proxy for tourism. The fact that there's, otherwise people in a city should pretty much consume about the same amount of food as any other city, but the fact that more is consumed here would suggest it's a tourism base. And construction, I don't consider that a driver, that's a passenger. It's because we have so much growth happening from all the other industries that we need to have more construction than the national average, because we have more population growth, more business growth. So that's what's been happening in Vancouver. And what's also, and there's, these things change slowly over time, but you can see some of these, particularly info culture, which includes tech jobs, has changed quite a bit in the last few years. And that's the office occupying jobs, which since about 2016 has been growing faster than other jobs. And this is changing some of the real estate usage in the city. So again, it's, you know, it's not something you can prescribe, it's just what's happening where the jobs are. And so, you know, the first three things I mentioned on that other chart are the office oriented jobs. And what that does, now we'll get into some real estate statistics. So for thinking about what this group might want to see, I'm sort of bringing in what we work with on a daily basis, and again, you know, reflects this idea of how cities get shaped. But decisions about where to put your office space that these companies make, they want to be downtown. So the vacancy rates on the left show you the top two, the red and the green lines. Those are suburban vacancy rates, both the red, the AAA buildings, so like the brand new buildings, see where the vacancy rates have historically been since 2010, and the suburban vacancy. And say everything was coming down as we ran into the pandemic. The market here was very tight. About an 8% vacancy rate is considered a balanced market. So this would have been what's considered a landlord's market when you would have rising rental rates, as where we were pre-pandemic. And you can see there was a bit of a blip on the downtown AAA, but otherwise, and that was really just some new buildings came on that didn't have time to be occupied at year end. So it's kind of a statistical anomaly there. But otherwise, companies show they want to be downtown. And in fact, we'll even pay more for an old building, the C-class downtown vacancy, which is the purple line, typically, than they'll pay for a brand new building in the suburbs, which is again, an indicator of where tenants want to be. And periodically, some municipalities have really pushed for office buildings to happen with, say, residential development in the suburbs. And these have really struggled to fill up because just there's this interest in being near other businesses, near amenities, near transit. So we know in Vancouver, all the transit comes into downtown. So it's also a good place where all of the employees can gather. And then I've got the rental rates on the right. I put into the year end. I didn't do year end 2020 for vacancy because the pandemic has made it very hard to figure out what is really vacant and what just has people staying at home because they're scared of a virus. So, but looking at where the rental rates are going, and you can see they've been going up since the market got very tight. And again, up until 2020, it was still cheaper to take. You could get cheaper, like brand new space in the suburbs for less money than old space downtown, but that's what people were choosing. And also where people are choosing to live and what's driving demand, or where people would prefer to live. I guess choice, sometimes you require actual housing, which we all know there's a shortage of that, but it's probably a lot of you have seen this. I pulled on the left, the CMHC median rents for 2-bedroom, just to have a quick comparison. Old product, newer product, and looking at the rents. And you can see even, if you scan over to the right in some of the suburbs, you can see that even old product downtown Kitsilano tends to get as good or a higher rental rate than brand new in some of the suburbs, which again, is sort of an indicator of where people would like to be if they can afford it. Close to the amenities downtown, but also a lot of the employment. We've seen that strong office growth downtown, and that's been further pushing demand for housing closer in to where those office jobs have been going. I was really intrigued in reading Bertaud's book talking about how quite often planners have one idea about what people should want. but people have another idea about what they should want. And when we're doing pre-development research for our rental apartment portfolio and for our new, we have a lot of development underway, as well as in the pipeline, about 8,000 units across the country. 2 buildings in Vancouver under construction. One finishes up in October. So for occupancy, anyone's looking to rent, Robson Street, Chronicle on Robson. But when we do this pre-development research, trying to figure out what should we be building that's going to last for 20 to 25 years and be in demand for tenants. And one interesting change that's happened, and people's preferences do change, is do you want a smaller unit that's brand new, new amenities, or an older one, but it's bigger? And in 2011, the majority of people in Canada were telling us they actually wanted the larger unit. So about 69% were saying they would rather have old and large. By 2016, that flipped. And this is from some surveys we ran with Harris Decima. There's been a few other surveys others have run, basically asking the same question. And that number sort of continues to grow of people wanting smaller and brand new, as opposed to a larger unit. I think that's somewhat intriguing. It does vary place to place, and I've just got some quick stats and age groups and so forth. But that shift that started to happen between 2011 and 2016 is sort of intriguing. But it's that, it's really hard for, say, someone outside to predict. We just have to ask people what they want, but also be aware that that can change. And we also are always asking tenants what they want. These are residential tenants, so renters, what's important to you? This comes from the Informa Canada survey, and I help set the questions that they put out every year. These are the people that do the real estate forums, but they also do a big renters survey every year. And when we're looking at the data ourselves, we tend to look at what are the top 3, 4, 5 things that renters are saying are important in terms of our decision making. But this one, we just asked, well, what's the most important? After you gave us 10 things, now tell us one thing that's important. Vancouver is the light green on the left compared to some other cities here. Price, Vancouver is very important. But what's also interesting is building quality. Again, that's maybe smaller but newer. It's become a really important thing to people. Location close to work, close to transit. And this is very common that we often get building quality and building quality is a bit of a new one actually for me to see on these, but location answers being very prominent when we ask these questions. So it's a little bit less about the suite itself and more about the location. This one's the 2019 survey. It was interesting in 2020, the access to green location close to nature, which was kind of near the bottom over on the right-hand side, that jumped way up during the pandemic version of this survey, which people, makes sense. The only place you could socialize was at the park, so everybody wanted to be by a park. Expect that will go back down. So that's how we look at some things. And sort of jumping a little bit different on rental in Vancouver. So we all know it's gotten very expensive. There's not enough housing. It is a crisis here and Toronto. That I worry about it as the health of the overall economy if we don't have enough housing, because we've been attracting so many companies and people who want to live here and want to work here. But one of the challenges we also have as a developer of rental housing is trying to understand what the future rents are going to be so that we can actually put together a pro forma to put a shovel in the ground and say, we're going to start building. And so one of the reasons rents have been going up a lot recently is there is more pent up demand for housing than in the past. And so we actually built a model. So it's a high level model to help us understand what's driving rents. And I think it's interesting for this audience, I think for just the demand supply imbalance, the red line. So each of these years, how many more demand units do we create versus supply units of rental housing? And so that obviously forces some people into ownership, some people into crowded housing that Jens von Bergen has written about, and so forth. And then we have the rental growth we just take for the Vancouver market. We took it from CMHC. In the Toronto market, we take it from our own portfolio. And you can see rough correlation between more imbalance, more pent up demand, and growth in rental rates, which if we are able to understand that, it helps us be able to predict that what buildings we can build and what buildings we can't afford to build. And that's just a quick list of what goes into our model. Net permanent residents, non-permanent residents, they've been a big part of rental demand across Canada in the major cities recently, not necessarily in the pandemic, but prior to the pandemic, and all the different migratory as well as, and then people exiting into the home ownership market. How am I doing on time? One quick last slide that often doesn't get talked about in urban discussions is that's the industrial sector. And I also like this one in relation to Bertaud's ideas. So this slide isn't about Vancouver. This is from the US, and it's by Prologis, which is a big industrial REIT, but they do fantastic research. And it's looking at the relative rents compared to proximity to population. So a lot of times we want to say, we want the industrial way out over here, and we want the residential here and the office over here. Well, what's interesting is the industrial users will pay more to be closer to the people and effectively closer where the offices are too. So that's what this is showing is, so it's indexed at 0% if you're 50 miles from the city center, and then you can see up to 140% premium to be right close to people. And one question I think would be great to talk about is maybe on the 20th or later today, is in Vancouver, the city of Vancouver proper, we have a lot of old industrial that's still job space, but it's in these areas which are also in demand for residential or for office. And I think it would be intriguing to think about, could you build rental on top of some of this old industrial in Mount Pleasant or Clark Drive, East Vancouver, close to where I live, because it's not dirty industrial anymore. It's either distribution or it's a bakery, industrial bakery. But it also just thinking about, this is where industrial tenants want to be too. They don't want to be out in Chilliwack. Some of them do, but they would like to be closer in, and to be thinking about that as we think about cities and the importance of this industrial sector. Everything you've touched today at some point was in a warehouse, and it had to get to you. So that's sort of my summary of how Bertaud's ideas, of how they dovetail with what we are actually seeing on the ground in the commercial real estate space. So I thank you for your time, and I hope there's some good questions.
Thank you so much, Wendy. That was quite amazing. I got to admit, when I first read Alain's book, Order Without Design, I was shocked to hear that the cities are a fundamentally job market. That just didn't seem to me why I was in town and whatever, all the things that attracted me. But then when you look at it, it's actually the fundamentals are there. So also that some of the data that you shared were the opposite of what I've assumed in the last little while, what was going on with COVID. And also it does seem to be quite a bit the opposite of what public policy is saying we should do with industrial, etc. So, and I know that Alain believes that one of the most important roles for planners is this measurement. So keeping a good eye on where people really want to be. So thank you for sharing. Okay, thank you. So our second speaker is a professor of finance at the Beedie School of SFU. He is Andrey Pavlov. And he has a long list of academic and professional achievements, which I could read, but I don't think I'd have enough time. But what I really appreciate about Andrey is he doesn't just cloister in his ivory tower. He actually engages in the public. And so you've often seen him speak up about things and presenting very important views. So Andrey, I really thank you for being here and for doing what you do with the public dialogue. Please have you.
Well, Sam, thank you. Thank you for the kind words. Yes, you're very kind with my involvement. That's the best possible view. There are other views out there about my involvement, which I'm sure many of you have seen. So if you allow me to share my brief PowerPoint presentation here, and hopefully that's a yes. Yeah, everyone can see that. All right, so before I get into it, I kind of have, I want to share my worst fear as a prof. And my worst fear is that a student falls asleep in my class and falls off the chair. And since I'm not very entertaining, not as entertaining as many of my colleagues, what I do is, the way I try to prevent that is by being a bit controversial. And you can see that right in the title. I recognize there's a lot of planners here. In fact, pretty much all of us are planners in one way or another. So I chose this title, Limits to Planning. You will see how it relates to the talk, but in great part because I want I kind of want to be a little bit controversial from the get-go. This is not to say I don't believe there is room for planning. Planning obviously is very important. Each one of us plans. We planned our day to be here at this great event, so all of us plan. But I do want to highlight that planning has some roles and not other roles. So that's going to be the thrust of my presentation. So my overall theme, my overall point in pretty much everything I do is based on the following question, which has nothing to do with real estate. But why are diamonds more expensive than water? Because water, right here, a glass of water is certainly a lot more valuable, especially when you're giving a talk to a large audience. It's certainly much more important than diamonds, right? So, you know, obviously, I think we all understand diamonds are more expensive because it's hard to get another diamond, and it's very easy to get another glass of water. And let's remember then that's kind of like the first thing you learn in economics, that prices are set on the margin, meaning the price on how much it costs to obtain another unit sets the price for all the units. And of course, that has everything to do with real estate because as Wendy already pointed out, in Vancouver, we have very tight supply constraints. And because of that, real estate is quite expensive. So what follows, I'm going to highlight a couple of different places where planning really needs to be adjusted so those supply constraints in housing are relaxed. So we're going to go through a list. Here's the first one. Some of our planning in Vancouver and in British Columbia has undermined investment in housing. And the first thing I'll bring up, not because it's the most important, but I think it's actually quite important, is that renter protection policies, while they're very appealing from a political point of view, and they're understandable, right? We do want to protect people from, you know, unexpected cost increases. While they are understandable, they ultimately hurt renters. And the way they hurt renters is that they limit supply. And Wendy, you talked about model of rent growth and all that. I don't know if you take rent control explicitly or implicitly. Maybe you can share that later on. But regardless of how you do it, clearly rent control interplays with any future projection of rent growth. And that's key for deciding which projects a developer can build and which they cannot. Many of those policies, it's not so much the cost in my view, it's the uncertainty that they create. And the biggest offender here is the rental-only zoning, which basically guarantees that if you're building rental, you're getting an incredible return because your property can be turned into a rental-only property through zoning. So a city government can do that. And then obviously you lose the option to do something else with your property. So some of those policies are very appealing and popular, but very detrimental. And then I'm surprised we are sticking with those policies and introducing more, especially after this recent study, which uses San Francisco rent control policy that was introduced in the early 90s. That very clearly shows that those rent control policies basically chase away renters, and especially renters that are living in the affected buildings. So in my view, it's a very prestigious journal. It's the most prestigious economic journal, and the findings are really very, very strong. So it's a bit surprising to me that we pursue with renter protection policies of the kind that we have, even though we understand really quite clearly they actually hurt the renters themselves. Next, limit to planning in general, or the way planning, in my view, needs to be adjusted. It's about restricting supply. So here's a graph from the Autos Group. This is not my own data. I just, the Autos Group produced this data in 2019, and it shows how many units are in development in each stage. And what's shocking to me on this graph is that 1/3 of the units in applications submitted in 2016 were still under review in 2019 in Vancouver. So that's a 3-year delay in the review process. Well, what do you think that does to costs and therefore affordability and certainly supply? So anyone claiming to want to increase supply really needs to look very hard at this data, which, by the way, with great disappointment to me, the city of Vancouver did not provide to me. So this is a third-party data, as I mentioned, Autos Group, and I have no way of verifying it or extending it. And then on top of just the delays, there's countless fees. Anyone who's done any kind of work in development knows that we have all kinds of fees upon fees upon fees that really also raise the cost of those housing units. All right, next point, and I know I'm kind of already running short on time, but I think I only have about 2 or 3 points left here. We are severely restricting access to land. Well, we do that in 2 ways. Obviously, we have oceans and mountains that we're not going to change, but the first way we do that is by limiting mobility. So here's a graph that ranks Vancouver as the 4th most congested city in North America. It was widely circulated graph when it came out. This is pre-pandemic, right? So obviously the pandemic has changed things a little bit, although I think we're now back to the usual congestion that we have. But being congested means it basically being the city being an employment center means it forces us all into a very, very, very narrow and small land area. And that, of course, limits housing and increases the prices. By the way, this is obviously for driving. I know that's not the only mode of transportation. If you live on SkyTrain and you can walk to a station and you can walk from a station to work, you're good. That's fine. But as long as you can't walk to your destination on either side, then the commuting speeds are incredibly slow, no matter what mode of transportation you use. It's basically not much faster than walking. And then we also, on top of the mountains and the oceans, we also have all kinds of land use restrictions. So one example is the agricultural land reserve. Now, I understand farms are necessary and needed and very valuable. I have no issue with that. What I have an issue with is that we have basically drawn lines on a map many years ago, and there's no consideration that I have seen of whether that's really the most efficient outcome here. So the example I have is ALR in Richmond, which is 2 kilometers to a SkyTrain station. I've seen no calculation of how much we're paying to have these farms there as a society, and I don't know how many people we're chasing away from Vancouver because we can't provide enough housing in order to provide those farms. So questions that at least need to be analyzed. Here's another example. That's a controversial one. The downtown east side. So I have a few quotes here. Obviously, the downtown east side is a disaster by any measure. I don't think anyone has any illusions about that. But well-intended, a number of well-intended policies, one after the other, including one that's going to introduce vacancy control, meaning limits to rent increase in between tenants, that the city is now considering and probably is going to introduce in a year or so. All this is done in the name of protecting the residents, but the net effect is that it actually makes it impossible to find housing for those residents, and ultimately hurts them. So we can see the homeless count goes up year over year. That kind of graph is not a surprise to anyone. And if we wait for the government to build, they're probably doing their best, but the supply of units is just incredibly low. This is straight out of BC Housing's website. So too much government intervention and planning errors and overstepping planning's really domain has turned real estate into a very, very into diamonds, and so very unachievable, unaffordable, and really just not enough. So there's light at the end of the tunnel. We do have some developments. happening. So that's very encouraging. Hope that goes through exactly like planned or even more. So here's a few ideas that we can do. I think that's kind of my last slide here, and I'll wrap it up. We clearly need to allow substantial densification. There's no question about that. The problem is the way we've been doing it. So Tom Davidoff, a good friend of mine, has this idea that we should auction densification rights. So instead of rezoning the whole city, we should decide how much densification we want. Hopefully that's going to be a lot, but whatever the number is, and then we should auction it throughout the city. And then whatever money is raised, that's my addition to Tom's idea, whatever money is raised has to go primarily to compensate the neighbors. Now, whether you agree that the neighbors are suffering, because there is a high rise next to them now, whether that suffering is real or imaginary, whether it translates into lower property values or not, it is real to them. I think there's no question about that. So pay them off. All right, there's no need. Densification creates so much value for society and really financial value. There's enough to go around so that everyone is better off. No one should be really worse off from that process. And that's a fairly straightforward process that we can follow to make sure everyone is happy, including the neighbors. Allow alternative uses in ALR within cities. So no one's talking about dropping ALR completely or anything like that. But when we have 2 kilometers to a SkyTrain station, that's off limits to residential real estate. I think that's that cannot possibly be an optimal solution here. Obviously, eliminate development approval delays. Everyone's calling for that. It has not happened. And so one idea is to say any development that conforms to much simplified zoning rules should require no municipal review at all. And then one idea, I know there's talk about merging all the cities into one giant municipality. I think that's actually the wrong way to do it. I think we should break up the cities. So we have about 22 or 23 cities in the Lower Mainland. We should break them up into 200 or 300, and that will allow them to compete with each other. So Philadelphia, I spent quite a bit of time in Philadelphia a few years back. It has 300 cities. Now it's a little bigger than Vancouver, but it has 300 cities. And, obviously it's a very different city, but housing there is really quite affordable. And then finally, double mobility within the city. So average commuting speed right now, no matter how you commute, is about 20 kilometers an hour. So I know because sometimes once or twice, before the pandemic, I had to drive from SFU on Burnaby Mountain all the way to UBC to see my friends there. And I don't need to tell you how long that took. So that's about 30 kilometers. In my view, one should be able to do that in an hour or 45 minutes at most, regardless of what mode of transportation they take. So with this, let's following on Alain's ideas, let's focus planning on public spaces and figuring out what people want to do and how to provide infrastructure for those needs, and otherwise allow people to do what they need to do to increase housing. So let's turn real estate into water, a lot more housing, a lot more into like water than diamonds. Thank you so much.
Very good. Thank you so much, Andrey. And I hope you will continue to be controversial. We have serious problems, and it often confounds me how government policy so often ends up accomplishing the opposite of what it tries to do. So I think maybe a better understanding of urban economics would help. And I also got to say that your background has been born and raised in Bulgaria, of a purely planned society, may have some effect on your interest in being controversial. So thank you so much. Our third speaker, final speaker, is Michael Mortensen, founder of Liveable.
What?
Super Tyler was here?
Yes.
Liveable City. Oh, sorry. We got somebody.
I did, but I'm honestly just gonna go.
Devin Harlows, can you mute your microphone, please, Devin?
Sorry, please. Yeah. Okay. Third speaker, Michael Mortensen, the founder of Liveable City Planning. And I think it's fantastic that he was the last graduate student of Walter Hardwick, the icon of planning in Vancouver. He went off to, he was a planner in Vancouver, major projects, went off to London to work for the Duke of Westminster, the largest landowner in London. Came back, and I don't know if I'm allowed to say this, but he was being touted as the director of planning. He's the best director of planning we never had. And unfortunately, he's making, I think, too much money now that he'll ever go and do that again. So unfortunately, but adjunct professor, and really, I thank you very much for, Michael, all that you do, and love to hear your presentation.
Thanks, Sam. Yeah, some jobs are great not to get. That's one of them, but I'll just share my screen here and see if I can, oops, not working. What's going on here? Can you, some reason this isn't working. Hello?
Sorry, Michael.
Yeah, Mike. Yeah, I think I need the ability to get my, there we go. Now
There
it's
we go.
working. There we go. Share that one. How's that?
Excellent. Okay.
Excellent. Okay. I think it'll, it's a bit of a slow lead here. So it looks like we've got about 15 minutes, but we want some time for Q&A. And I'll just say that I thought I'd approach it. I really hadn't engaged a lot with Alan's work in particular on cities as self-organizing systems, emergent order over design. But I thought I'd just tackle the topic on emergent order and pair it with this idea of the livable city, which has really defined the way that we approach the planning of Vancouver as a very special city in the world. Now, I can make it. Yeah, so as Sam said, I'm sort of a developer planner. Did my thesis at UBC with Walter Hardwick, who I'll talk a little bit about, and got my designation in planning, became sort of worked in community development, worked in affordable housing with CMHC, advised the development permit board for 3 years, got tapped on the shoulder to go work for the city as a planner in major projects planning, working on projects that were large in scale or contentious projects. I've been teaching as an adjunct professor at the Sauder School of Business, and I've been managing development for the better part of the last 2 decades. When I came back from London after Brexit, I Brexited. I launched Liveable City Planning here, and I serve a wide variety of clients, mostly private sector development clients, but also nonprofits. And I'm working with Crown corporations like BC Housing on affordable housing. So all in all, I think I've got about 5,000 units of housing under planning in the region. And so I'm well aware of some of the challenges and this tension between the economic forces driving, demand for real estate and space and growth, and everybody's aspiration for a livable city. I donate a lot of my time as a board member, so I serve on the board of Lambda Alpha International, which is an honorary land economic society. I'll talk a little bit about them. I serve on the board of Urban Area for Smart Cities, Vancouver Farmers Markets, Small Housing BC, and I'm an advisor for Great Northern Way Trust. So pretty busy, but as you said, I was Walter Hardwick's last graduate student. I did a thesis on retrofitting suburbs. I think it's kind of interesting that Walter, when he became a professor at UBC, was in 1962, was I guess fighting some land use planning, which wasn't meeting society's needs. Students living in illegal suites because you couldn't have secondary suites in homes. And so Walter, I think early on, was sort of challenging orthodoxy on land use. He was, I think he's a very interested in urban land economics, went to school in Wisconsin, and was a founding member of Lambda Alpha International, which has been here, I think, getting our 90th anniversary for the organization, but has been in Vancouver since the 80s when Walter founded it with a number of other people. So his ideas on cities as emergent order, cities as self-organizing systems, and livable cities helped contribute to the livable region plan in 1976. Big survey about how people wanted to live, and then reconciling, I think, the change of our city from an industrial city that was really goods export oriented to one that was post-industrial, and all of the attendant land use changes that came with that. So Walter was, I think, one of the first people to study land use values around False Creek and recognized that that industrial land had new life as mixed use, residential-led development. And he led the redevelopment of Granville Island as well as Champlain Heights. So I had a great mentor in Walter, and he was a real fan of emergent order and cities as self-organizing systems. And clearly, you know, I had the view that we need to challenge planning orthodoxy on land use because it gets dated, frankly, you know. So back to the livable, this plan in the 70s has led to a Vancouver that, you know, the region, I think, is relatively more compact than all of its friends, all of our cousins south of the border. So we are successful in that measure, but there are challenges, and we still have to challenge, I think, our planning and the way we govern land uses. So when I did my thesis in the 90s, it was on retrofitting suburbs, and it was about basically an observation that our land uses in our suburban areas of the city, RS1, RT zones, weren't meeting contemporary needs, economic needs, social needs, environmental needs. And so the thinking was, well, how are we going to adapt these places? And really what it is old dated zoning is preventing change. And I think we need to really blow up our land use planning and start fresh. Maybe we need sunset clauses on our land use plans that require the renewal regularly, or we need an economic lens that looks at how well are they meeting our needs. Because as Alan notes, you know, we have just this constant demand for growth and people living in the center. People want propinquity. So to address the issue of commute time, you know, I respectfully disagree with Andre. I don't think we should increase the average movement speed to 40 kilometers an hour through our city, because that's an average. So you're going to need 100 kilometers an hour in various places. But I think we should increase propinquity and allow people to live closer to jobs. And that requires us to, of course, expand housing opportunities closer to where people work in types of housing that they can afford. So another mentor of mine was Jane Jacobs, who I studied with along with Walter. And she too, in fact, was a very keen observer of cities as economic systems and noted for her work in that area. And in fact, I helped Jane edit her last book, Dark Age Ahead, in 2003 before she died, I think in 2005, 2006. And got this great, lovely little letter from her, kind of typed on a manual typewriter, hand corrected. But and Jane was also an influence in terms of viewing cities as complex, open systems. And so yeah, so Vancouver, we've always been fighting this question between growth and livability. This is Arthur Erickson saying, you know, we're going to get 1 million people in our region, noting that new migration targets for Canada are set at about 1.2 million people over the next 3 years. That's 400,000 migrants a year. You know, what if a third of them move to the Lower Mainland? You know, it's going to be a really, really huge surge in demand for new housing. So what kind of city do we want? How are we going to change? Our planning is not addressing this in a quick way or in a really robust way. So Walter founded LAI, and I was lucky enough to become a member a number of years ago. I serve on the board, and as I mentioned, I'm a planner. I'm also a developer. So I'm really keenly attuned to housing needs and the ability of people to afford housing. So we're looking at our average housing prices hitting at $1.7 million in 2021 for Greater Vancouver. And why are we letting a 130-year-old guy dictate how we live today? This is Harlan Bartholomew, who did Vancouver City Plan in 1927. You know, you can have one kitchen in a single family zone. You can't have multiple units. And of course, apartments and commercial uses are noxious. There are negative externalities. So I think we have to blow up Harlan's plan and start again. We need an economic equity lens on all of our zoning. to say what incomes are required to pay for the housing that's generated under current plans. I think it should be a provincial mandate that every city in BC, and particularly Metro Vancouver, should do an analysis of what a new house will cost you in all of our zones and what income is required and what percentage of our population can afford that home. Is it right that 60% of our city is locked in with land uses that generate housing affordable to less than 5% of our households? It's a massive inequity. And that's, of course, being driven by high demand, low supply, also migration, domestic demand, international demand. So we need to address that. And of course, you've seen governments now moving on the demand side, putting in taxes on foreign buyers, trying to limit the impact of global capital. But the demand is also domestic. It's us. And the way forward is not single detached housing. It's going to be multi-unit housing. So townhouses, apartments, which require lower construction costs, land amortized over more units, and ultimately lower incomes needed to support those. So this has been a focus of my work, of my volunteer work for urban area, and we ran a wake for the single family home. So what are we going to do now with all of this land? We need to come up with new forms of intensity that still retain the amenity that people desire in neighborhoods. And my prescription is vitamin D, or vitamin D squared, and that's let's match densities to where the demand is going, but mitigate the impact of that density with really excellent design. So that's kind of in a capsule, my prescription. With Small Housing BC, we've been looking at ways of adapting without assembly, single lots, and turning them into multifamily homes that are compatible with the neighborhood context, but add where there's one house today, 4 to 5 to 6 packs, I think we jokingly call them, at lower cost. So making them more accessible. So again, 60% of our land, RS1, RT zones, suburbs, affordable to less than 3% of our households, I think, roughly 3%. How can we increase that to accommodate a quarter of our households based on income? Let's do away with parking minimums. Like, this is ridiculous. House people, not cars. If you're living close to transit, SkyTrain, if you're in the city of Vancouver, you're pretty much in a transit-rich neighborhood. And I think we should let go of parking minimums and lower the cost of housing. What should we do with our public land? This is a little example of what you might do with a little 120-foot strip around the Langara golf course. Do you want 136 rounds of golf a day, or do you want affordable housing for 8,000 people? I think my little poll here was pretty clear. Reforest and intensify the use of the golf course, develop the outside strip for affordable housing. Our policies in terms of community amenity contribution, expectations, I think have an inadvertent side effect of ratcheting up the price of housing, because I think Vancouver and other municipalities are all beginning to use zenith housing prices as the basis for calculating the land lift extraction that typically happens when you rezone a property to higher intensity. I think someone should look at this as a thesis, because I think it is a ratchet, and it's part of the driver for cost. And there's only one person who pays at the end of the day. It's a home purchaser or it's a renter. These costs do get passed on. They're not transparent. We don't have a free flow of information on CACs. I'm working in a couple of municipalities where they won't even share what historical CACs have been. I've done freedom of information requests and I've been refused. So I think we need way more transparency and maybe more rational community amenity expectations when we rezone land. We also need to look at our rules around unit design, as Alain has mentioned in his book and some of his work. We should be catering to a wide spectrum of consumer needs, not the narrow definition of what housing should be for one or the average or the one specific family. I think we need to break some rules to get compact affordability. That was a subject of an urbanarium chat not that long ago. Pre-pandemic, lots of people at Robson Square. Yeah, and I love this quote from Doug Helbach from the Pedestrian Pocketbook. Europe has its cafes, America its bathrooms, and what we need is more espresso, less plumbing. We need more compact homes. We need higher amenity outdoor areas and public spaces. But for livability, affordability, sustainability, we have to cater to a wider spectrum of housing needs, and that includes compact units, because of course, compact units are going to be more affordable. We know how to design them well. We can do a 600 square foot 2-bedroom. I know on social media, this, oh my gosh, it's unlivable. But I dare you, I defy you to go and look at this unit and tell me that this is unlivable. This is a 600 square foot 2-bedroom unit in South Falls Creek, or Falls Creek, Southeast Falls Creek. Yeah, so 1257. So anyway, so I'm delivering around 5,000 homes under planning with Liveable City Planning with all of my different clients. And I'm just noticing that everyone's intervening in the housing market at all levels, municipal, regional, federal, provincial, they're all trying to impact the housing market in different ways and often in contrary ways. So federal, why aren't we zero rating housing for GST? It's ridiculous that the government says out of one mouth, we want affordable rental, but then out of the other charges the landlord 5% of the capital cost or the fair market value of that rental unit the minute they open the door to a renter. Provincial, provincial property transfer tax. You get double whacked on it because you've got new jacked rates for land assemblies going in on a development, and then of course they collect again when they collected on the new units going out. Regional DCCs have gone up, and municipal CACs have gone up as well too. I think we're seeing lots of government intervention in housing, and it's making the waters pretty rough for people who deliver. So with that, I'll just stop and maybe see if we can get a few minutes of questions.
Thank you so much, Michael. Sebastian, I'm giving you an impossible task. Is there any kind of question that you could highlight for, give your best. You've got 30 seconds.
Yeah, actually, thanks to Anastasia, we have one brilliant question which encapsulates the entire order without design model, so it can go to anyone. She has asked, why do businesses want to be in downtown when the majority of the regional workforce is in the suburbs? This was to Wendy, but anyone can take it since it's so simple.
I'll take it. I mean, obviously every business, every tenant downtown has their reasons, but a lot of people like to come downtown. I think I would start with that. The amenities, you can't really compare the amenities you have downtown in terms of restaurants and retail, the access to transits. You can have people coming from Richmond and coming from Surrey and coming, coming from North Van, all quite easily. So there's that. So, and I think that's the main thing. And then it's also that clustering effect that if you need to have a meeting with a lawyer and an accountant and an architect, and I'm trying to think, who else do we meet with on a regular basis? The interior designers for our rental buildings, everybody's downtown. So it's a very efficient place to work. If you had to come downtown for each meeting, it's less efficient. So those are some of the reasons. Obviously, you'd have to, each type of office tenant has their own reasons and their own weighting of what I just gave you.
I'm going to have to intervene because we are being very good at ending right on time, and we want to give the last word to Alain Bertaud. And I just want to encourage everybody, get your tickets. We really want to have a good turnout for the Public Salon. So Alain, give you your final words.
Well, thank you very much for inviting me. Again, this is for me a learning session. And as usual, the speakers were top quality. I learned a lot. So if I summarize, I think the message of Wendy was really, I really like this analysis of trend and change in consumer demand. This is absolutely essential. And the role of the planner, especially to do that, to adapt to changing trend, not to impose certain things. So I like this approach very much. Andrey, of course, on renter and rent control, I could not agree more. But what is interesting is that this idea, which is so old, is coming back all the time. And I am not so sure we can fight that. For me, it's like a flying carpet, something which doesn't work, but it's very attractive as a mean of it. I like very much the idea of also farms, you know, you criticize agricultural land, which are very well located. And of course, we are not against agriculture, but you could calculate, I don't know what they cultivate there on this thing, if it's carrots or potatoes, but you could calculate by capitalizing the price of land, what is the cost of a potato grown there? And it will be, I don't know, if you can sell them on the market, you will make a fortune probably. But, and then finally, Michael, yeah, I think too, you pointed out that in fact the objective of zoning is to make change difficult, and I like your idea of having a you know, a clause in zoning where you know, it has a life after 10 years. It has to be revised. You know, it's not a permanent thing. I think this is a very interesting idea. I don't know if it has been used anywhere. I don't remember having seen it. But I think that it will be a very, very healthy thing. Yeah, a sunset clause in, and so that's about, let's say, if I summarize, I think I'm running out of time too myself. This was really a very high quality thing. I learned a lot about Vancouver, and I hope that when my turn comes, I will try to be as relevant as possible. Thank you so much for this.
Thank you, Alain, and thank you for inspiring all of this. I urge all of you to come on September 20th in the evening. Very safe. We've got lots of social distance and lots of good health aspects taken care of. So thanks all of you for attending. Thank you, Alain, for 5 urban lunches in a row. And let's see you on September 20th. Thanks, everybody. So welcome, everyone. Thank you for being a part of this, our final of 5 urban lunches in the lead up to the Alain Bertaud Public Salon on September 20th at the Vancouver Playhouse. Alain Bertaud will participate on the big screen with 6 local urbanists to discuss how we can make Metro Vancouver more resilient, innovative, and affordable. This will be in preparation for the visit of Alain and Marie-Agnès next spring for a program of workshops and gatherings. I want to acknowledge that both Alain and Marie-Agnès are with us again today, and acknowledge that they have attended all 5 of our urban lunches. I think they get a record A for attendance. It's remarkable that they have such a commitment to Vancouver. Thank you so much. I also just want to acknowledge that we have host sponsors that are going to be supporting Alain and Marie-Agnès when they come to Vancouver next spring. We've got West Group, Bryce Rossage, IBI Group, Intercorp, Bucci Developments, BOP Architects, Wall Corporation. Very grateful to all of them who have been willing to help make this happen. So Marie-Agnès and Alain, they have invitations, open invitations to speak at a meeting of all the heads of the planning departments of Metro Vancouver. They've got an invitation to speak City of Vancouver staff, as well as student workshops and media interviews. And I do want to acknowledge that Marie-Agnès has had a very serious diagnosis, and that all of us are sending our thoughts of health and strength. And thank you for making Vancouver your goal for healing. I think that is really inspiring. And note that we will be continuing 1 urban lunch every month until they arrive. Okay, I just want to talk a little bit about the Alain Bertaud Public Salon. It's coming very soon, Monday, September 20th, 7:30 p.m. to 9 o'clock p.m. at the Vancouver Playhouse Theatre. Now, because of public health orders we will be limited to just under 400 people in the theater. We'll have to show evidence of vaccination again. And I got to say that the Vancouver Playhouse has done a great job of separating the seats. A lot of work, health issues. So you will have a lot of elbow room. But you have to get your tickets now before they're all gone, because there's limited numbers of tickets. If you are a member of the Architectural Institute, Planning Institute of BC, or the BC Society of Landscape Architecture, you will be given professional development credits for attending this event. We just want to acknowledge the landscape architect group in Terraculum, who has come on just recently to enable that for their people. So on September 20th, there will be short presentations from 6 Vancouver urbanists who are making a difference. People like Chris Lewis, Squamish leader, who gave an outstanding presentation on SNOC and the other First Nation developments. We'll have Jens von Bergman, data visualization specialist, and both of them have spoken in previous urban lunches. We will also have UBC planning professor, Julia Harton. And then there will be discussion, input from the audience, and Alain will be on the big screen. And we really, well, personally, I think one day historians will write, it all happened. Everything changed on September 20th, 2021. So I urge you, don't miss this. This is really important stuff. We are working to try to bring some changes to clearly the situation we have has serious problems. Okay, what we have 3 people in that discussion with us today. They represent important perspectives, different perspectives from different sectors. And I want to note that Sebastian Zane is the chair of our community organizing group. And he's with us, and he will be managing the questions and answers. So you can directly send him any questions you have, or you can just put them on the chat, and he will take them off that. Okay. So before we get too far, I just want to acknowledge Lynn Zanata, who has managed all of the technical issues and done lots of the invitations. And we have quite a good turnout. We had probably one of the highest people that are asking to come on. And so we're pleased that we did have quite a